Cash is king, or so they've told you. But what if I said your money is rotting right now, sitting in that bank account, silently suffocating under inflation, fees, and the ticking time bomb of economic chaos? Wake up. Your cash isn't safe. It's not growing. It's a sitting duck for market crashes, bank failures, and governments printing money like it's monopoly. But what if you could turn that paper into armor, into assets that don't just survive the storm, they thrive in it? Today, we're exposing the 10 assets that are smarter, safer, and deadlier than cash. Assets that'll make banks look like a bad ex you can't believe you ever trusted. And that's just the beginning. By the end of this video, you'll know exactly where to put your money to protect it, multiply it, and never fear another financial meltdown again. Stick around, because the people who act on this, they'll be ahead while everyone else scrambles to catch up. Let's move. Asset 1. Government bonds, the safe haven. They say cash is safe, but let's be real. Your money sitting in a bank is a sitting duck. Inflation is eating away at it, banks are slapping on hidden fees, and the economy? It's a roller coaster you have no control over. But what if you could lock in security without watching your money rot? That's where government bonds come in, the financial world's version of a bunker. When you buy a government bond, you're not just stashing cash away, you're putting it to work. You're lending money to the government in exchange for guaranteed interest payments. Unlike that savings account that barely keeps up with inflation, bonds fight back by offering a steady return. And the best part? Governments don't go broke overnight. They have the power to tax, print money, and stabilize economies, making bonds one of the safest ways to protect and grow your money. But here's where it gets even smarter. Some bonds don't just sit there earning predictable returns, they adjust for inflation. Treasury inflation-protected securities are designed to rise when inflation spikes, making sure your purchasing power never shrinks. That means while everyone else is watching their cash lose value, your money is staying strong and working for you. The key is knowing when to use bonds. When the economy is shaky, when the stock market is a bloodbath, and when uncertainty is high, bonds act as your financial shield. But while bonds keep you safe, they're just the beginning. Because the real power move, it's not just about playing defense. It's about going on the attack. And that's where our next asset comes in. Asset 2, real estate, a tangible asset that grows. If government bonds are your shield, real estate is your sword, an asset that doesn't just survive economic chaos but thrives in it. Unlike cash, which loses value every day, or stocks, which can vanish overnight, real estate is real. Something you can touch, control, and leverage to build serious wealth. Think about it. No matter how the economy shifts, people will always need a place to live, work, and do business. That's why real estate has been the ultimate wealth-building tool for centuries. While inflation destroys savings, property values rise with it, rents increase, and smart investors cash in while everyone else struggles. And the best part? You don't need millions to get started, because real estate lets you use leverage. With just a fraction of the price as a down payment, you control an asset worth 5x, 10x, or even more. That means when the market goes up, your returns multiply. But here's where real estate truly beats cash. It pays you two ways. First, through rental income, which puts money in your pocket every month while your asset grows in value. Second, through appreciation, where your property's worth skyrockets over time, turning a smart investment into a wealth machine. And if you think real estate is too risky, look at history. Property values tend to bounce back stronger after every downturn, while cash, it just sits there, shrinking. The key is knowing what kind of real estate to invest in. Residential properties, commercial spaces, real estate investment trusts that let you own a slice of massive real estate portfolios without managing a single tenant. Real estate is how ordinary people become rich. It's how billionaires stay rich. And right now, it's your chance to play the game right. But while real estate builds long-term wealth, what if you need an asset that's as liquid as cash, but way smarter? Asset 3, gold and precious metals, inflation-proof wealth. When the economy crashes, when banks fail, when governments start printing money like there's no tomorrow, gold doesn't flinch. It doesn't lose value overnight. It doesn't rely on some corporation's balance sheet, and it sure as hell doesn't evaporate like digital numbers in a bank account. Gold is real, tangible, and has been a symbol of wealth for thousands of years. And in today's unstable financial world, it's more important than ever. Here's why. While cash gets weaker every time inflation rises, gold moves in the opposite direction. Historically, when currencies lose their buying power, gold gains value. Why? Because gold is finite. You can't print more of it. Governments can flood the system with trillions of new dollars, but gold remains scarce, and scarcity creates power. That's why the richest investors, the biggest banks, and even entire countries hoard gold as their ultimate backup plan. But gold isn't the only metal that holds value. Silver, platinum, and palladium also serve as inflation-proof assets that can hedge against economic chaos. Silver, for example, is not only a store of value but also has industrial uses, making it even more in demand when supply chains tighten. These metals aren't just for collecting. They're a strategic way to protect your money from destruction. And here's where it gets even better. Gold is borderless. Unlike real estate, which is tied to one location, gold can be held, stored, or even moved across countries without relying on governments or financial systems. It's a true global currency, recognized and valued anywhere. But while gold is an incredible way to preserve wealth, what if you want to multiply it? What if you need an asset that can grow faster, generate cash flow, and outperform inflation on steroids? Asset 4. Luxury assets. Collectibles that appreciate. What if I told you that watches, rare cars, and even sneakers could make you richer than keeping cash in the bank? Sounds insane, right? But the world's wealthiest people have known this secret for decades. Luxury assets aren't just status symbols. They're investments that beat inflation and grow in value over time. Think about it. A 1960s Rolex Daytona that once sold for a few $100 is now worth millions at auction. A Ferrari 250 GTO that was just another race car in the 60s? Today it sells for $50 million plus. Even rare sneakers like Jordan 1s or Yeezys have turned into high-demand assets that appreciate faster than some stocks. Why? Because true luxury is scarce, and scarcity drives up value. Luxury assets are the ultimate flex, but they're also a hedge against inflation and economic downturns. When markets crash and currencies lose value, the ultra-rich don't panic. They know that hard-to-get, high-demand collectibles don't just hold their value. They often skyrocket in price when everything else is falling apart. That's why you'll see billionaires pouring money into art. Rare wines, classic cars, and limited edition timepieces. Because unlike cash, these things don't rot away. They become even more valuable with time. But here's the catch. Not all luxury assets appreciate. Some are just hype. The key is knowing what to buy, when to buy, and how to hold. Rarity, demand, and historical appreciation are everything. You're not just buying an item. You're making a strategic investment in exclusivity. Luxury assets are a power move for those who know how to play the game. But what if you want an investment that doesn't just grow in value, but also pays you passive income while you sleep? Asset 5. Keeping some physical cash, but smartly. Wait, didn't we just say cash is rotting away? Yes, but here's the twist. While cash is a terrible long-term investment, having some physical cash on hand is a strategic power move, if done the right way. Imagine this. The banking system locks up, ATMs stop working, card payments get declined, or even worse, your bank suddenly freezes your account due to suspicious activity. What do? This isn't some doomsday theory. It happens all the time. Whether it's a financial crisis, cyber attack, or government-imposed limits on withdrawals, relying 100% on digital money is a dangerous gamble. The rich and financially savvy, they always keep some liquid cash as a safety net. But here's the key. You don't just hold cash mindlessly. You keep enough to handle emergencies, but not so much that inflation eats it alive. This means keeping a portion of your wealth in physical cash, ideally in multiple currencies, stored securely in different locations. Why multiple currencies? Because if your local currency crashes, Having strong alternatives like USD, Euros, or Swiss francs could be a lifesaver. Physical cash is about control. It gives you instant access to opportunities, emergency spending power, and financial security when things go sideways. But sitting on too much cash, that's just letting your money decay. The real game is knowing how to balance liquidity with investments that actually grow your wealth. And speaking of growth, what if you could put your money somewhere that beats inflation, compounds like crazy, and builds true financial freedom? Asset 6. Owning a business. Your own money machine. Cash is dying. Stocks, bonds, and real estate are great. But what if you could own something that prints money on demand? Something that puts you in control. Not the government, not the banks, not Wall Street. That's exactly what owning a business does. Think about it. Every billionaire, every financial legend, every self-made success story, they own businesses. They don't just invest in other people's companies, they build their own. Why? Because a business is the ultimate asset. It generates income, scales with demand, and grows in value over time. While inflation eats away at savings and wages, a profitable business adjusts its prices, expands its reach, and keeps cash flowing, even in a recession. And here's the real power move. Businesses create multiple income streams. Whether it's a brick-and-mortar store, an online brand, a digital product, or a service-based hustle, your business isn't just a job. It's an income-generating machine that works for you. You're not trading time for money anymore. You're building something that pays you whether you work or not. But let's be real. Not all businesses survive. The key is choosing the right model, leveraging automation, and scaling smartly. Online businesses, software, e-commerce, and service-based models have low startup costs and high profit potential. The best part? Once a business runs smoothly, you can step back, let systems and teams handle operations, and still collect the cash flow. Owning a business isn't just about making money. It's about building an asset that works for you. While everyone else is stuck in the cycle of earning and spending, business owners are stacking profits, reinvesting, and multiplying their wealth. But what if you want an asset that pays you like a business, without actually running one? Asset 7. Cryptocurrency, the digital gold rush. They laughed at Bitcoin in 2010. They called it a scam in 2015. By 2021, it was creating millionaires overnight. Now, it's reshaping the financial system, and the people who ignored it are watching from the sidelines as early adopters cash in. Cryptocurrency isn't just another asset, it's a revolution. Unlike cash, which loses value every time governments print more, Bitcoin has a fixed supply. Only 21 million will ever exist. That's why, over time, Bitcoin has outperformed nearly every asset class, including stocks, gold, and real estate. It's the hardest form of money ever created, completely decentralized, immune to inflation, and beyond the control of any government or bank. But Bitcoin isn't the only player. Ethereum powers the backbone of decentralized finance, allowing people to lend, borrow, and earn interest without banks. Then there are Layer 2 solutions, smart contract platforms, and AI-driven blockchains, the new Internet of Money. Investing in the right crypto projects today could be like buying Amazon stock in 1997. High risk, but the potential for life-changing rewards. Of course, crypto isn't a guaranteed win. It's volatile, markets swing wildly, and regulation battles could shake things up. That's why smart investors don't bet everything. They allocate strategically, holding a portion of their portfolio in proven assets like Bitcoin and Ethereum, while taking calculated risks in promising altcoins. And here's the real kicker. Crypto isn't just an investment. It's a hedge against the broken financial system. When banks freeze accounts, when inflation wipes out savings, when governments tighten control over money, crypto remains borderless, censorship-resistant, and unstoppable. But what if you want an asset that delivers consistent, passive income, rather than wild price swings? Asset 8. Farmland, the original wealth generator. Long before stocks, crypto, or even gold, one asset ruled the world: land that produces food. And while flashy investments come and go, farmland remains one of the most time-tested, recession-proof, and wealth-building assets in history. Here's why. No matter what happens in the economy, people need to eat. That means farmland isn't just valuable, it's essential. Unlike stocks that can crash overnight or cash that loses value, farmland generates consistent income through crop production, livestock, and leasing opportunities. And as the global population grows, demand for food skyrockets, pushing land values and farm profits even higher. The ultra-rich have always known this. Bill Gates? He's one of the largest private owners of farmland in the US. Why? Because farmland is inflation-proof, recession-resistant, and a hedge against financial chaos. While governments print more money and real estate bubbles burst, farmland keeps producing income year after year. But farmland isn't just about growing crops. It's an investment that benefits from multiple income streams. You can lease it to farmers, grow high-demand organic produce, or even tap into government subsidies. Plus, with technology advancing, modern farms are more efficient, profitable, and scalable than ever before. Farmland is the ultimate generational asset, one that builds wealth, provides stability, and never goes out of demand. It's why the rich buy land and never sell it. But what if you're looking for an asset that's even more liquid, passive, and hands-off? Asset 9. Private equity. Investing like the wealthy. Ever wondered how the ultra-rich grow their wealth so fast? They don't just park money in savings accounts. They invest in private companies before they become massive. Private equity is where early investors put money into startups and growing businesses long before they go public. Think about the people who got in early on Uber, Airbnb, or Facebook. They didn't just make profits, they made fortunes. Unlike public stocks, private equity is less affected by daily market swings, and their returns can be enormous. While regular investors wait for a company to hit the stock market, private investors buy in early and cash out big. Of course, it's not risk-free. Startups can fail, and private investments are harder to sell. But when chosen wisely, private equity can offer returns that make traditional bank interest rates look like spare change. So do you want to play it safe and settle for pennies? Or would you rather think like the wealthy and get in before the big money rolls in? Asset 10. Oil and energy investments, profiting from global demand. Here's the thing. The world runs on energy. From cars to factories to homes, energy demand never stops. And while cash loses value in a bank, energy investments can grow as demand increases. Investing in oil, natural gas, and renewable energy can provide steady returns because people always need power. Look at the numbers. Oil prices fluctuate, but over the long term, they have historically outpaced inflation. Even as the world shifts toward renewables, solar, wind, and battery storage companies are booming. Some of the wealthiest investors hold energy assets because they know energy isn't optional. It's essential. So whether it's traditional oil and gas or cutting-edge green energy, investing in energy can be one of the smartest ways to keep your wealth growing while the world keeps running. Is your money truly safe in the bank? Let's talk. Inflation is eating away at your savings. Banks are setting limits on withdrawals. The global economy, unpredictable. So keeping all your money in cash? Probably not the smartest play. If you want to safeguard your wealth, it's time to think bigger. Diversify. Look beyond traditional banking. So what's your next move? Which assets do you trust more than cash? Drop a comment and let's discuss. Because in times like these, smart decisions matter more than ever.